Good afternoon, everyone, and welcome to our webinar. We will just wait another minute while we let everyone kind of join in, and then we'll get started. All right, good afternoon, everyone, and welcome to the webinar. My name's Defina Williams. I'm OFN's Chief Public Policy Officer and Head of Government Affairs, and we're so excited to have you all joining us today. Just a couple of quick housekeeping notes before we get started. We have quite a large crowd today, so to keep things manageable, please use the chat function to connect with your colleagues, and then please use the Q&A function to ask any questions. We will try to answer as many of them as we can at the end of the presentation. Thank you to everyone who submitted questions ahead of time. We got quite a few, and we will not be able to address all of them during this session, but just know that the CDFI Fund staff has them all, and we'll make sure they have access to any questions that are submitted today as well. We'll also be recording, and we'll be posting a recap with a link to this in a couple of days. So with that, let's dive in. So we're here today to talk about a really important topic, CDFI certification. We've worked really closely with so many of you and our partners over the past several years as the CDFI Fund has worked through revising the CDFI certification application. So we've responded to numerous requests for comments, and we've weighed in on proposals. And finally, last December, the fund put out its long-awaited revised CDFI certification application. So we're really excited to have Jeff Merkowitz and Michelle Dickens join us here today from the CDFI Fund so we can have a conversation about some of the pressing issues that are on our mind as the industry gets ready to reapply for certification under these new rules. I do want to note that the CDFI Fund staff has really produced a lot of good resources, so I encourage you all to review all of them carefully, including detailed guidance. There's PowerPoints and FAQs and webinar presentations, all on the CDFI Fund's website that can really help you guide you through the process. But with that, I would like to invite Jeff and Michelle to join me on screen, and we can get started. Great. So welcome to our webinar, Jeff and Michelle. We're really excited to have you here today. And we wanted to start with a little bit of some framing conversations just around why the CDFI Fund thought it was important to undertake this process of revising the certification application at this time. So, what is it that you all were hoping to achieve with this reform process?
Well, first off, Defina, thank you for this opportunity from Opportunity Finance Network. We're very happy to be here and to have this opportunity to engage with all of you and talk about our CDFI certification revisions, which has, as you noted, been a long time coming. And I think, what initiated this process for us was, the CDFI Fund was created initially in 1994. The first CDFIs were certified in 1996, 1997. And the certification standards and the application had not really changed a whole lot in that time, and yet there's been tremendous change within the industry itself. So, when we first certified CDFIs in 1997, there was 196 of them. And, there has been, there's somewhere between 1,400 and 1,500 today, and total assets of more than $300 billion. In addition, the CDFI certification has become sort of a brand in and of itself. It's a qualifier, not just for CDFI Fund resources, but for other federal, state, and local government, as well as private sector benefits. And that was not how it was originally envisioned. It's often been used as sort of a good housekeeping seal of approval. It was not initially designed as such. And, we want to protect the brand, but also, make sure that it actually signifies what folks think it signifies. They're not just those additional benefits and resources. There has been a lot of money that has been coming towards CDFIs, and there's a certain expectation that CDFIs are working in certain areas, working with certain populations, and providing responsible financing. And we want to make sure that our certification reflects that. And finally, another one of the motivating factors for us was the fact that CDFI financial products and financial services have expanded, and the types of the industry itself, the use of financial technology is now available. And that's not something that was ever really envisioned at the time of certification when it was first created. And so we wanted to make sure that our certification standards were not a barrier to CDFIs being able to take advantage of new tools in the financial sector and their ability to serve the populations and the communities that we want them to serve wherever they are. So that was a lot of what drove us and the need for these revisions.
Absolutely. It's really important that this key industry credential is reflective of kind of where we are in the financial services industry and where CDFIs are now too. So there's a lot, I think, for CDFIs to learn and unpack about the new application. And before we go in kind of section by section into some of the policy changes, I wanted to give you all a chance to opine or share the information on what's changed in the process of reapplying to be certified. Like, what do CDFIs need to know about the process right now?
Great, I'll take that one. So yeah, and again, happy to be here. What's really important to be mindful about the new application process is that there are more components to it. For example, all applicants will need to fully register with sam.gov in order to demonstrate that they're meeting the legal entity requirement. And currently, in order to access the application, all applicants must either bulk upload or manually upload their transactions that were closed during the most recently completed fiscal year into the transaction level report and run a target market calculator in order to initially determine whether or not it's meeting the target market requirements, both number and dollar. And then once the calculator indicates that you are or not meeting, if you're not meeting, you will not be able to access the application. And after you've gone through the past, after you've gotten past the TLR section, you'll come to another section of the application where you can seek eligibility determinations on non-pre-qualified financial products, financial services, any disregarded or included uses of assets or uses of staff time, targeted populations, target market assessment methodologies, and or any amendments to the financing practice standards. So an applicant will need to notify the CDFI Fund through this process whether or not it's seeking more eligibility considerations by answering yes to any of the questions in this section of the application and providing more documentations around their request. During that time, the fund will review the request and provide a response to let you know whether or not the additional, the request will be considered. And if it's approved, then we will communicate not just to the applicant, but also to the industry so that future applicants can take advantage of any of these new approved pieces. And then once the applicant has made it past that section, along with certifying and submitting its TLR and having rerun its target market calculator, it can then move on to the rest of the application, which is the application with the components of all 7 criteria to make it through submission. So that's sort of process-wise what happens and the new pieces to be mindful of.
Great. I think that'll be really helpful as CDFIs try to navigate this process. And this next question might not be totally fair because I think it'll vary depending on CDFI. But if you had to say what would be the most challenging aspect of kind of this revised certification process, what would you say?
Yeah, I think it's a little too early to call that right now. But my best guess would be basically wrapping your heads around the new components, in particular for those who have not used the transaction level report before in the past. That might be a little hurdle for everyone. And then, of course, we have a lot of information on the website, just slogging through the certification general guidance materials. It's like over 200 pages long. So getting to know the information, getting to understand what the requirements are before actually starting an application.
Yeah, that's great advice. And, we're going to spend some time today walking through kind of section by section parts of the application, and we'll try to touch on as many of the kind of burning questions that came in. But again, we will not be able to get to everything today. So I do want to reinforce that not only the materials that you all have made available, but that, the CDFI Fund actually does monthly certification webinars and calls. So if you don't get all your questions answered today, it's a great opportunity for you to attend those and connect directly with the CDFI Fund. But let's kind of move on through the next part of the webinar. So I want to start by talking about, the primary mission and responsible financing guidelines. So one of the changes to the application is the requirement that applicants provide information about their financial products and services for all the reasons that Jeff mentioned in his opening remarks. So this is really, I think, a cornerstone of this new application, and it's really important to understanding and ensuring that entities that are seeking certification are actually meeting that community development mission. So why don't we start with an overview of this section? Like, what do applicants need to be able to provide to demonstrate the primary mission? And then it'd be great if you could walk us through some of the highlights of the responsible financing guidelines.
Sure. Yeah, and as you know, in the primary mission section is probably where the most significant changes to the application have taken place. And that is a large part of what was driving this process. By regulation, CDFIs are required to demonstrate that they have a stated mission of promoting community development. So we wanted to make sure that their activities actually aligned with and were consistent with that stated mission. And so, one thing that hasn't changed is, that they have to have that stated mission of promoting community development. So that's more or less the same. But what is new is that they now are also required to submit a community development strategy. That can be part of a strategic plan if they have a strategic plan. If an organization does not already have a strategic plan, it is worthwhile working on one and creating one, but we also have the opportunity for those that have not done so to provide a board-approved narrative describing, what they're trying to accomplish through their financial products and how the change that they're trying to achieve through that. Then there's also the Make Your New section on responsible financing practices. And we have set a number of standards for those practices. These are going to vary depending on the type of activity that a CDFI is engaged in. So some are product specific or product type specific, I should say, and others are more broad. We have a number of practices that, are just ineligible for the purposes of CDFI certification. So for example, if a CDFI or an applicant that is offering consumer loans, if they allow for an APR that exceeds 36%, as measured by the military annual percentage rate or MAPR, and if those loans also meet a number of other criteria, including an annual default rate over 5%, or have a leveraged payment mechanism, have repayment timeframes that exceed 12 months for any such loans of $1,000 or less. Some rules around refinancing, and also, making sure that if those loans don't amortize smoothly to a zero balance by the end of the loan term, any of those would lead to disqualification, FA-CDFI. So just to be clear, lending above 36% MAPR for consumer loans by itself is not automatically disqualifying, but would be if in combination with any of the additional listed practices or characteristics associated with those loans. We also are ineligible. Another ineligible practice or disqualifying practice would be originating or otherwise offering loans that exceed interest limits that apply to non-depository institutions in the states where the borrower resides. This is intended to prevent the so-called rent-a-bank lending that has been used to evade local interest rates. So there are also, in addition to some practices that are just kind of straight out ineligible, we have some, actually just going on, I didn't mention there are some that are connected with mortgage lending as well, I should say. So, and by mortgage lending, I'm talking about single family, owner-occupied residential mortgages. I know there was some confusion in some of the earlier documents that we had put out on what type of mortgage we were referring to. So we're much more specific in our final version. But if a mortgage lender, fails to verify the income or assets of the borrower of any of its mortgage loan products, or offers mortgages that include negative amortization or interest-only payments, if they charge upfront points and fees to the consumer that exceed 3% or the qualified mortgage limits for smaller loans, or if they otherwise underwrite any such mortgages at less than the maximum rate in the first 5 years, those are prohibited practices. And I should be clear that, on the mortgage lending, we do sort of specify a scope of activity. And so there are a number of exceptions to these, or we specify what types of mortgages these apply to and what would not, what would be exempted. So for example, if you're doing an interest-only loan payment that is part of a foreclosure prevention or a loan modification, that would be allowed. Some other prohibited practices include selling charged-off consumer or small business debt to debt buyers. For FDIC-insured applicants, a current CRA rating below satisfactory, and for equity investment financial products, using those products to gain control over an investee or leveraging for its own benefit the assets of any of its active equity investees. Just continuing very quickly, there are some ineligible practices, though, that do allow for an explanation. So for example, for the purposes of CDFI certification, applicants' underwriting standards should include an evaluation of a mortgage, consumer, or small business borrower's ability to pay back a loan. But applicants that don't have those standards as part of their underwriting practices, could be determined ineligible, but would have an opportunity to offer a narrative explaining how the absence of such an assessment serves a community development purpose. Similarly, there are some opportunities to explain if a CDFI is offering small business loans that allow for an APR exceeding 36%, and Also, on certain mortgages with balloon payments or unless provided through a government program, mortgages that carry an original maximum term longer than 30 years. And likewise, with charging excessive overdraft or non-sufficient fund fees, as would be for depositories. Those have opportunities to sort of provide some justification for those practices. So again, that's kind of a broad overview of the responsible financing practices standards. I do encourage folks to take a close look at the application and the guidance, and especially if you're doing any mortgage lending, paying particular attention to the scope of those questions, because there are some important differences there and exceptions.
Thanks, Jeff. And I think you touched on a key area of feedback from the CDFI industry during the last iteration of the application process, which was ensuring that flexibility was built into the responsible financing guidelines. So I know we heard a lot from our members that, they needed the space to be able to innovate and develop the products that might be responsive to community needs that may not fit so neatly in some of the categories. And we're really pleased to see the CDFI Fund, come out with this revised application that does allow for that explanation and that narrative of, how some of these products might advance the community development mission. So as part of that, you all introduced, a new process by which you can request approval of those products. So I know a lot of CDFIs that may want to take advantage of getting a new product approved are wondering, if they submit something to the CDFI Fund to say, hey, we have this type of new mortgage product or small business product, how long would it take for the CDFI Fund to kind of make a determination about the eligibility of those new financial products or financial services, or, to update those responsible financing practices? And what does that process look like?
I'll just jump in here and just say that we have considerations for several things that I mentioned a little bit ago. But first, I'll say as well, like if you put forth a request for consideration of any of these things, the system will not allow you to submit an application until a determination has been made, for one. And then we anticipate, and again, this is a new process that we're working through and trying to figure it out, but that each review of these considerations will take about 90 days. And similar to the old full application review process, we'll reach out, if the requester, if any additional time is necessary. The section of the application for these considerations kind of walk you through most of the information that we think we'll need to make a determination. However, for anyone who's wanting to provide additional information, you do have the opportunity to attach some backup support for things that might help us make the assessment and come to a final determination. And again, I'll just add, like I mentioned before, that anything that we do approve will be useful and available to everyone in the industry who wants to come in for application.
Excellent. So let's move on to the financing entity test. So this is an area where I know there've been ongoing questions about this financing entity test and how CDFIs that provide a lot of technical assistance and development services had some concerns that they may not be able to meet the test. So for example, we heard from a lot of our native CDFIs and some of our small business lenders that provide a lot of TA that maybe doesn't always translate directly into a loan, but it's still very valuable and meaningful. That that balance that is needed in order to meet that predominance test might not come through when they're applying for certification. So I think this is also true for a lot of CDFIs that are doing a lot of pass-through grants. Especially we saw during COVID, a lot of CDFIs were tapped to administer grant programs on behalf of like state and local governments. And so can you walk us through the financing entity test and explain to us, what part of the test has actually changed under the new application? Because I think you all were actually doing some of this behind the scenes that maybe wasn't always visible to applicants, but what's changed in the new application? And then what options exist for CDFIs that may not meet that predominance test at the point of application?
Sure. The finance entity criterion still measures the applicant's ability to demonstrate that they are the predominant business activity is that of arm's length on-balance sheet transactions for eligible financial products and financial services. And it's still insured depository institutions, holding companies. They are all still deemed to meet the financing entity requirement automatically. The revised application walks the applicant through identifying the assets and staff time dedicated to these financing activities and separating those from activity that is not dedicated to financing activities. And so what's new is that the guidance material actually identifies the types of activities and staff time that can be disregarded. For example, while it's true that development services and staff time can't be disregarded, that can't be counted as an eligible financing activity per the regulations that we have, staff time dedicated to the provision of such activity may be disregarded in the calculations to determine the predominance if it's identified as per instructed in the application. So I don't know, Jeff, if you had anything else to add there, but I think that's a lot hasn't really changed there. We just tried to highlight what is allowable activities and what's not.
Yeah, I think you captured it. And just to note that this was not really a major problem in the past in terms of, especially with development services. Even with native CDFIs, I don't know that there were any that, this policy was there and did not prevent any native CDFIs from becoming certified.
Great. And before we leave this topic, one very specific question about a definition. So we had a question come in that is asking, if you can clarify what you mean by staff must be available to provide financial products and services.
Staff time, staff are dedicated to, or they are there to provide those activities. So it's not sort of one-off. So they have staff dedicated to financial products and financial services.
Great. And I also wanted to note that in the guidance materials, you all actually have a pretty thorough step-by-step example of the calculation and kind of walking it through with how to calculate, FTEs and what goes in the numerator and the denominator. So I'm going to just drop that in the chat. And again, I think just another signal to sort of make sure you're thoroughly reviewing all of the different materials that you all put forth, because there is some really important and valuable information in there that can help answer some of these questions. So let's move on to, since you brought it up, development services, where I think we didn't get a ton of questions on this, but I still think it would be valuable just to hear, the overview of what, if anything, has changed to the development services part of the application.
Right, development services hasn't changed much, if at all. We really just clarified what a CDFI must use to demonstrate that at least one development service is regularly offered and is provided at least once annually. And if it's provided by a non-affiliated third-party contractor, that there must be a contract in place and they must demonstrate that they have control and routinely monitor the services that are provided. But everything else is basically the same. You have to demonstrate that at least one development service is connected to at least one financial product or financial service.
Yeah, I'll just note that, one of the things that we were trying to accomplish through this application is a lot of increased transparency. And I think, ironically, that increased transparency probably created some confusion in some cases, because there were instances where CDFIs or others thought something was new, but that had been a policy all along and that we had been reviewing for. And so in some cases, the comments we received suggested we were putting in something new when we weren't. It does raise the question whether applicants or CDFIs had been reporting accurately to us. in some cases, but the policies themselves had not changed. We're trying to be much more transparent so that folks can understand how we are reviewing them, and also making sure that applicants, CDFIs, are reporting accurately to us, which I don't expect anyone would have been doing reporting inaccurately deliberately. It may have just been uncertainty over what our rules actually were.
That's really, I think, important context for this conversation. One thing that is new, though, is around target markets. And this was one of the changes that I think we, across the industry, many of us were really happy to see some of the changes around target markets and removing some of the geographic restrictions on target markets. So introducing a new level of flexibility in the application to allow applicants to serve an investment area comprised of qualified census tracts that have a, the CDFI Fund determined have a statutory economic distress criteria, right? So you don't have to, mess around with some of those maps that I think gave people a lot of heartburn over the year if you are using one of these pre-qualified investment areas. So this change, I think, was very well received, but we do have a few kind of clarifying questions that came in ahead of time that I think will help as folks try to navigate this part, and then some related questions about accountability that we'll get to as well. So can you also just walk us through how the removal of those geographic boundaries impacts those who are serving or would like to serve other targeted population or customized investment area?
Yeah, well, obviously the big change is that if you are proposing to serve an investment area or certain other targeted populations, you no longer need to create one of those maps. Now, the significance of that is that in the past, when we did our target market calculations to determine whether or not an entity was providing at least 60% of its financial products to a target market, we were really looking only within that map that the applicant or the CDFI had submitted to us. If an entity provided a financial product outside of that map, even if it was in a qualified investment area census tract, or if it was to a targeted population that, in some cases, that the CDFI had been certified to serve, that actually would have counted against their 60%. So we were only looking within that map, that qualifying activity within that map. Anything else was sort of counted against them. Now the idea is, that the CDFI's activity anywhere, if it is in a qualified investment area census tract, if it is to one of our pre-approved targeted populations, whether it be in low-income targeted population or again, one of the other pre-approved other targeted populations, the applicant or the CDFI would get credit for that activity regardless of location. It also means that, you don't have to submit a target market modification request if you want to start serving new geographies, or necessarily new targeted populations. There are accountability requirements that still go along with all of those in order to receive the credit for it. But if you can meet the accountability standards and you're serving a new area or targeted population, you can get credit for that. I will note that there are some instances where the map is still required for customized investment areas. That is, a set of contiguous census tracts that combine both qualifying and non-qualifying census tracts, but that as a whole meet the distress criteria for an investment area, or for countywide or parish-wide census tract, investment areas, which obviously also consist of both qualifying and non-qualifying census tracts. Those an applicant would still be required to submit a target market map for that. If a applicant is proposing to serve a new targeted population that is not among one of our pre-approved targeted populations, that may require a map as well.
Great. And we did have a number of questions coming in around, during the recertification process, if you want to change or update your target market, how do you do that in the application? Is there some other process? Like, I think people are trying to understand if they wanted to.
Yep, you do it in the application.
Great.
Yep, it's very straightforward. So, in your application, you will be evaluated on the activity that you demonstrate and the target markets that you list. As I noted, we will also look to see if you meet the accountability standards for those target markets. So if you say you're serving an African American targeted population, we'll look to see, do you also meet the accountability standards for serving that target market? Doesn't mean you can't serve African Americans if you don't, but it would not be considered part of your target market. And so, if you want to get credit for it, you can do so. You can do that, starting right now. So if you are a currently certified CDFI and you are thinking of changing your target markets or adding a new one, you can submit that as part of your new application. Just make sure that you're also meeting the accountability standards to make sure that you get the proper credit for that. Michelle, do you want to add anything to that, or did I miss anything?
No, I think you're right. I think the only thing I would add is I would think of it as sort of wiping the slate clean. You're coming in with a fresh application. So whatever you're proposing to serve is just submitted through that application process. So whatever you were previously approved for, you can either go with that, so long as, if it's a customized investment area, it's meeting all the requirements, if your accountability is matching as well, and that you are submitting the data that supports what you are intending to serve. But in the application, if you anticipate expanding your target market to other populations or geographies, like Jeff said, just kind of identify that in the application, demonstrate that you have the accountability to it, and you won't in the future have to come in for a target market modification.
Great. And before we leave the kind of target population question, low-income housing tax credit. So, a number of CDFIs expressed concern that it wasn't listed as one of the pre-approved low-income target population proxies. So, will you, update guidance, or do you plan to include LIHTC as one of those kind of proxy definitions for affordable housing?
Yeah, so that's referring to our target market assessment methodologies. Which I will also note is something new and hopefully beneficial in the application. In the past, every CDFI, every applicant was required to tell us, how are you going to assess whether your lending is going to a target market, and we would make a determination whether or not that assessment methodology, was sufficient for our purposes. Now, we have put out a list of pre-approved target market assessment methodologies that any applicant or CDFI can select from and say, these are the methodologies that we are using, and they can be confident that those are acceptable to the CDFI Fund. Within there, for low-income targeted population, we included a number of program proxies, and as far as and that is for individuals who are participating in a federal program, typically, that itself has low-income criteria that for participation that are similar to the CDFI Fund's standards. And we've said that if you can document that this individual is participating in that program, then that is sufficient for assessing that individual as a member of a low-income targeted population. As far as LIHTC goes, I mean, I would note that that is not a program that individuals participate in. They may reside in LIHTC units or in buildings that have been financed with LIHTC. Not all buildings that are financed with LIHTC are 100% affordable. So, we did not include that as an initial proxy. But I will again note, as Michelle has before, that we have this opportunity now for, and this was always available, but if there is an assessment methodology that you think should be included, should be available, you can submit that to us as part of the application or prior to the application. And in that section 0 part that Michelle talked about, and we will make a determination. There's a set of criteria and questions that we ask you to provide information on. So, but if you can demonstrate that that would be a sufficient methodology for assessing an individual as low income, and how you would do that, then we will review that and make a determination. If we find whatever is proposed acceptable, we will make that available to all applicants and CDFIs, not just the applicant that submitted the proposal.
Great, thank you. And kind of moving on, because it directly related to a lot of the questions we got around target market, were a lot of questions around the changes to accountability, both in the pre-sent questions, but also I'm noticing in the chat, a lot of people have a lot of questions around some of the changes to accountability. So can you just give a brief overview of some of the changes to the accountability requirements, and then we can dive into some of the more specific questions that have come in?
We've placed a lot more emphasis on governing boards as the decision-making body in the new application. And so the revised application provides some options for applicants to use to demonstrate accountability. And there are 4 different ones. And it depends on whether or not it has a formal governing board or need to use an advisory board in conjunction with its governing board or its leadership, or in the case of credit unions, in conjunction with its membership. We've identified a minimum number of board members for both governing board and advisory board, and the percentages accountable to the target market. The changes actually benefit those who seek to serve multiple target markets or a national investment area, because previously there were geography requirements on accountable members, which was an impediment to serving a national investment area. So now, under each option, board member sources of accountability are based on the target market type, separate and apart from the geography of the target market, unless it's, of course, one of these customized investment areas. Also, if the applicant is proposing multiple target markets, the application now allows for accountable members to meet the standards collectively, which eliminates the challenge that was associated with the previous requirement to meet certain percentages for each proposed target market component. Jeff, am I missing anything? I feel like I'm missing something.
No, I think the other benefit of the change we made is that this is how we are able to allow CDFIs that are serving investment areas essentially to serve a national investment area, and it's kind of tied to the geography that Michelle talked about that was previously a standard. So we had not come up with a way when accountability was tied much more to specific geographies for an applicant to be certified to serve a national investment area. So in addition to the benefit for CDFIs that are serving multiple target markets, this is also what allows them to serve a national target market. Is some of the changes that we've made.
And for applicants, how do they verify that their board members are meeting the new accountability requirements? Like, how is the CDFI Fund going to sort of check that?
We hope that the categories and the questions that are associated with the category that are asked throughout the application is enough information for applicants to kind of make its own determination on who they are proposing as an accountable member. And it's sort of like the same way we did it under the old application. And we have these categories and kind of go through that. And the questions are really target more precise information on each board member. And we hope that the categories and the questions that are asked provide enough information to do that. We just need as much information about the board member as possible. Again, this is an opportunity for us to be a little bit more transparent than we were in the past. So you'll have your board record where you would identify the proposed members. You would give us information about that board member, but we would also show you very specifically in the application now on the board record which board member was approved, which one was not, and how we calculated whether or not that that board member or that board meets the requirement. So you won't really know for sure. You will be proposing as you had always been, and the CDFI Fund has the final determination on that.
Great. And then can an applicant or controlling entity, can they demonstrate accountability to their target market via the governing board of its CDE or its community development entity?
So it depends. It depends on whether the applicant's governing board is the same as the CDE, or if it would use its CDE's governing board as the advisory board. So either way, it's doable, but we need that information to be presented in the application to make the final determination.
Great, super helpful. Okay, moving on to the non-government entity, which I'm surprised to get a few questions about that, because this usually is not one that we get a lot of questions about, but we did have you know, a few folks that wanted some clarity. So can you just, share with the audience kind of, what this provision means, and just kind of explain what it means to be a non-government entity?
Right, so the applicant or the CDFI cannot be an instrumentality of a government or a state or I forget the exact words in the statute now, but we have very specific definition that's also in our regulations around control and what it means to be controlled by a government entity. And although there haven't been any significant changes in this section alone, any yes response, as always, does not necessarily mean that you are out because you have identified an issue or a potential issue. So again, you'll provide us the documentation that's whatever's in your bylaws, whatever contracts or agreements you might have with other government entities, and we can make the determination as to whether or not there's control. But there's a long list of a three-pronged approach to control as defined by the CDFI Fund that you might want to pay attention to in the application.
All right. So our last kind of set of questions, and again, hopefully we'll have some time to get to some of the questions that have popped up in the chat, but I think you all have actually addressed quite a few that have come in while we've been having the discussion, is I think the thing that is on everyone's mind right now, which is sort of, the process and timing, and what do we have to do and when, and, what are things due and what are the timelines going forward? So you had an early kind of recertification window. And I wonder if you could just share a little bit around sort of what you, trying to achieve by having that window open for, not currently certified applicants and others who kind of wanted to step to the front of the line, and, just give us a sense of where we are in that process.
Yeah, the early recertification process was put into place for, I think, a couple of reasons. There are over 1,400 currently certified CDFIs that need to be recertified by December, need to have submitted their application by December of 2024, this year. And we want to spread the workload out so everyone's not inundated with submissions. It was also an opportunity for early submitters to go ahead and submit an application, and if successful, great. And if they're not, by any chance, they would have an opportunity, although a small window, but they could potentially submit a new application by the December deadline.
Excellent. And then, to your point about sort of having to recertify, 1,400 entities, there's a lot of paperwork and things that need to be inputted into the system and uploaded into AMIS. And so some of the CDFIs that have been, attempting to get out ahead of this and apply early have encountered some technological issues or challenges, for instance, issues with AMIS or errors within the actual system. So how are you all addressing those issues, and, will they be fixed before the December 20th deadline? And then if there are kind of continued challenges that, particularly unforeseen ones that just pop up as you're kind of going through the process, are there any opportunities to adjust any of the timeline or process if this becomes kind of a bigger issue that impacts a large number of applicants?
Yeah, I'd like to say I just apologize in advance to folks who have run into some hiccups that caused some frustrations and the fixes that might be taking a little longer to complete. Again, it's a new process, and before deploying the application, we went through a rigorous application testing. However, the industry has been very, very good at informing us of whether or not things are working and how things are going in the process. I'd say continue to do that and do it through the submission of a service request. That's our best way to get the information to the CDFI Fund. And if you can add screenshots, that would be great. We are working with the developers to fix all the known issues, and we anticipate that it will be done in advance of the early submission deadline. But we will continue to address issues as they crop up and make determinations on any adjustments to any deadlines closer to the deadline. We couldn't say that right now, but hopefully everything will be fixed by the time everyone is submitting their applications. But we don't know what we don't know.
And you might have just answered this question, but what's the best way to get questions answered as folks are really diving in and turning their attention to this new application? How can they reach you?
Yeah, our service request is always our preferred form of communication. And if anyone has trouble with that, they can always reach out to our help desk line. We have a dedicated line, which is OCPE CERT, OCPECERT at cdfi.tres.gov. That's our direct email address to my team. Sometimes, the questions get a little detailed where it's going to take us a little bit of time to get back to you, but we're doing our best. And again, there's a lot of folks out there clamoring for certification. So we're answering a lot of questions as quickly as we can. So patience would be great. And if you only submit one service request at a time, that would even be more, that would make me more happy.
And I'll just add that we are updating our list of FAQs. So we hope to have something out relatively shortly with some new FAQs that have come in. And so we will be, updating that list regularly as new questions come in that are, more broadly applicable. Obviously, groups can come in with their individual questions, but if there are questions that we think would be helpful to the broader set of applicants and CDFIs, we will be including those in the FAQ as well. So keep an eye out for updates.
Absolutely. Those FAQs are really valuable. So in our last couple of minutes, I do want to try to get to some of the questions that came in. And I think there's a few of them that a couple of people have asked the same question. So hopefully we can get them some answers. And One of them is around sort of the pre-screening for target markets and that kind of review process. I think there's some interest in understanding, like, if you start the application and you get to a point where you might need some kind of pre-approval, or you've hit some kind of a snag where you can't go forward, is there like a clock that's ticking on your application? Is there a window by which you have to like get back in there, or do you have to start all over? Or like what happens when you have to get some sort of approval from the fund in the middle of your application?
If you're submitting the pre-decisions, you want decisions on things that you want to add into your application, and you can't go forward with your application unless the fund has made a determination that you can use whatever you're putting forward, you won't be penalized for not having submitted your application at that time, by a deadline. I suspect we would get everybody in and done and reviewed before their deadline, but we don't know what we don't know. And so I think we'll have some time we would allow for that time for the submission.
Great. Couple of questions that have come in around the accountability and target markets. So I'll just sort of fire off these couple back to back. So for board members, do you have to provide proof of income for low income board members? Looks like you're saying no.
You do not. Some of that is self-reported. You should be using the same methodologies that we have for our target markets for your board members. So if they self-attest to, then we will accept that.
Great. And then is there any specific number or range of numbers that's acceptable for the number of advisory board members you can have, or does that not matter?
We have a minimum of 5, but we don't have a maximum.
And then do eligible board members have to reside in the target markets? I think this is kind of a two-part question. So, regardless of race or background, so I think people are trying to understand, like, how do you meet the accountability for the other targeted population? And then how does that overlay with some of the sort of geographic requirements?
I'm still going, Jeff. I hope that's okay.
Go ahead.
Okay. So there's no geographic boundaries on the board members. They can reside anywhere with some exceptions. So if they have a customized investment area, we do want those board members to be in qualified census tracts within those customized investment area. Otherwise, for investment area, they can reside anywhere within a customized investment area. If they're of an other targeted population.
Within a qualified census tract.
Oh, I don't know what.
Yes, so reside in any qualified census tract anywhere. Yeah. Yeah.
Yes, the other population, they can reside anywhere.
And then as we were getting to the end, I think a couple of questions that, reminders around some of the deadlines around early submission, early applications. So can you just remind folks what the early submission due date is, when you'll expect to hear back if you did apply for earlier certification? And then there's a very broad question, which is, can all CDFIs recertify now? So I think you can hit all of those in this response.
Sure. The early submission window is from May 31st, 2024 through July 31st of 2024. We anticipated completing, we had over 350 groups want to apply for early submission. We hope to get them all done by October. The end of the grace period and the end of the submission of your new applications for recertification is December 20th. And we will take the better part of 2025 to get through all of those other 1,200 or so applications on a rolling basis. So as we get the applications, we'll be making determinations on them at that time. Did I answer all the questions?
I think you did. And then the last one, which I think will be helpful for everyone, is can you just repeat the email address that people can use to submit questions?
Sure. It's OCPE, the Office of Certification, Policy and Evaluation, OCPE, CERT, CERT@cdfi.tres.gov.
All right, so hopefully you
It's
all
all
got
in
that.
our material. Feel free to check our website for that information.
Yes, so we are just at 4 o'clock, and I think we actually managed to answer all of the questions that came in over the chat and Q&A. So I just want to thank you both for taking the time this afternoon to talk to OFN's membership about this really important recertification process that we're all going to be undertaking in the coming year or so. And we hope this will just be the first of many continued conversations and dialogues that we can have as the industry navigates this process going forward. So with that, I want to just thank you so much for being here with us today, and thank all of you for joining us on this webinar. And yes, we will be posting the recording for those of you who asked in the chat. So again, thank you for joining us today. It was a great session. Bye.
Thank you, Defina, and thank you to the audience for all the great questions.